Should we buy or sell corporate bonds? So first off, read this disclaimer carefully. This ETF is under fixed income, and it is the LQD. So it is investment grade corporate bonds, 0.81% here from the 52-week lows, and we have seen a minus 5.8% pullback so far. Here are the weekly data points. So this is the big picture, and we can certainly see here that there's been some time cycles. So let's measure them for consistency. So there's certainly something here with the time cycles. You could draw different durations. There is well, it certainly seems like we are part of a declining time phase here. We can also measure these smaller time cycles within here. Could potentially be a bit more left in the decline. We do have this very key technical pattern currently, and that is this very clear head, well, shoulder, head, and shoulder. So head and shoulders pattern. That is a very classical technical pattern, and it is definitively it is bearish, but the extent to which it is bearish depends on how the security in question previously reacted to head and shoulders. So when we look here, like a bit in the past here, you could argue that we do have some something a bit head and shoulderish here. Like that. I think the brush here is just huge, so let's change the brush size. Like that. So this certainly looks like a head and shoulders. Here we don't really have anything clearly head and shoulderish. Maybe we have a head and shoulders here. You could make that case. As such, you could argue that this security has some history here of head and shoulders that have played out. But this current one is definitively the big one. We haven't seen anything like this massive in quite. Well, we haven't seen anything this big before. So yeah, so currently you could certainly make the case that the bears are in control, but there is the caveat, okay. So the thing about head and shoulders patterns, that I have talked about before, is that you could get this clear support here around the neckline. So in this territory, you do see that there's a lot of interaction here between the price action and this level. This is something that the bulls could use as a support. So that is just something to be aware of. Okay, let's go to the daily data points. Yeah, so here you can see the horizontal support level in more detail. It's interesting. Definitively something to have on our radar. Looking at the RSI, we are not at the low end of the RSI channel that has triggered rallies in the past. Because if we zoom in a bit here, you see back here, this RSI level was a very nice buy opportunity. In this instance, we did actually collapse lower. Here, this territory on the RSI was a good risk reward for a buy. Here, a very nice level. We are not at that level yet, though, but it's close. So that is definitively a level to have on your radar. The complicating factor here, as far as the more bullish take goes, is that we do have horizontal support. Given horizontal support, there is the possibility that will trigger the bulls before the bulls get the opportunity to get really triggered here by this low end of RSI. Okay, yeah, let's go to the daily data points. Yeah, we see a pretty similar message. Yeah, I mean, we have seen a very substantial pullback. We have a nasty head and shoulders pattern, but there's the big but that one of the classic ways head and shoulders is neutralized, that is through the bulls using the neckline horizontal support to buy. Okay. So here is the seasonality for LQD. So over the last 5 years, January, February, and also March, they are weak months. April, May, June, July, obviously way stronger. Over the last 10 years, then January is decent, but then February and March are weak, and you have the very clear substantial strength here in this period, but that is still a bit off into the future. Over the last 20 years, January and February are more bullish than bearish. March is mediocre, then April is very strong. So the seasonality here is mixed, but there is a bit of a bullish lean, but not like really strong, because February and March, they are weak longer term, and also when you look shorter term, as we did, the seasonality was not that bullish. Well, it was more bearish. So here is some trend lines. We are bouncing from this descending diagonal trend line, so that is interesting. It has worked out in the past here to create some mean reversions to the upside, so that could benefit the bulls beyond, that horizontal support. When we look here and compare the investment grade corporate bond ETF LQD with the S&P 500, and we look here at the dividend. So the dividend is 2.54% here for LQD and 1.22% for S&P. So you get more than double the yield. So that's one of the benefits with the bond market, is that it is a place to get some yield. But this is not by any stretch of the imagination like an amazing yield. 2.54%. It's given the current inflation we have, especially in America, 2.54% is not going to help out much. Looking at the holdings, you get some Treasury agency shares, Anheuser-Busch, CVS Health, GE Capital, Goldman Sachs, T-Mobile, AT&T, Wells Fargo, Boeing. Yeah, so you have bonds here in very large cap stocks. Companies with a huge moat. So that is, it means that the bonds, they do have some safety built into them. When we look at some correlations, then we do see long term there's a 61% positive with the S&P, 62% with the total bond market ETF, the BNDX. Then when it comes to the high yield, junk bonds, the high IG ETF, then we do have a 24% correlation. Then minus 59 with the dollar index, short term. Minus 45 SPY, 85 with BNDX, 79 with the HIG, and minus 66 with the dollar index. So if we look here both short and long term, the strongest correlation was with the BNDX. So let's do a bit of a quick study of what is happening here with the BNDX as well. So looking long term, this is so BNDX has just eviscerated this potential support level we had. You could have made the case back here that maybe this level will work as horizontal support, but it just sliced through it. So that was nasty. And so the situation for this ETF is substantially worse. You could argue that we have gone down to a cluster of horizontal support levels. That certainly could, also benefit the LQD, like indirectly, here on the daily data points. Yeah, you could argue that, if we draw it in, that the price has fallen down to this cluster of potential horizontal support levels. So there's this massive volume shelf here, and that is one of those things that the bulls could benefit from. So to sum up my take here, I am feeling more Well, I'm feeling slightly more bullish than bearish on the LQD, but it is very slight. I think that I will grant the bulls the benefit of the doubt that they do have a horizontal support level on the BNDX, which LQD is strongly correlated with. And also on the LQD, we did have this support level that could work out. So yeah, but looking longer term, it's way more messy. So sort of like the bullish lean here is more short term, and it is with low conviction. So it occasionally that is the setup you get in the market. But yeah, if you want access to the VIP access subscription, it's going to reopen pretty soon, and because yeah, it's spectacular stuff. So definitely stay tuned for that.